Hi, this is Kerry Artak with Wicked Stocks bringing you an update in the TLT. The TLT, by the way, I did record this video on Friday, January 10th, 2025. Friday, January 10th, 2025. I should probably have it on the screen here. But this is an update on what's really happening with this market. And I'm just kind of backtracking a little bit. A bottom line reminder, and that is the fact that we remain in a 4-year plus longer term bear market in the TLT. In other words, the interest rates have been in a trend of continued increases over the same time frame. Just a reminder that any bond instrument and the TLT as well, which is an ETF, of course, a tradable ETF, their price correlation is inverse to interest rates. So you can obviously see as this market has been dropping for the last 4 years, the interest rate market has been one of rising rates. There was obviously an acceleration. This was from November of 21 to October 22, for instance. That also coincided, if you recall, with a significant bear market, a 1-year bear market in the stock market. Anyway, 98.67. Dropping 34 cents a week is our ceiling of resistance long term, below which the long term dynamic remains bearish for the TLT. Higher rates, the order of things below 98.67. Now inside this, and I'm going to zoom in just a minute here, that 98.67 is right here, this line. By the way, this is a weekly chart. This is for the week of Monday, January 13th. Next week's levels. Just to let you know that in October, you may remember we had a sell signal below this rising channel bottom, which indicated that we were no longer going to approach 98.67, but rather expecting this base of support that we've already been testing. We have not tested the lower level, 84.22, but we did close several weeks ago below 88.41. That's been holding the last couple of weeks. And now, because of that, settlement below 88.41, I'd mentioned you could then expect within 2 or 3 weeks or so 84.22. 84.22 is a significant support level. It may well hold through the first quarter. That is to say, through February, March, and from here we can round up within 2 to 3 to 5 months or so, back up to 98.67. We could fill this wedge out for well into 25, middle of 25 anyway. By the middle of 25, it narrows significantly. So the market will tip its hand one way or the other by either A, closing below 84.22, indicating longer term bearish continuation, or over the next 3 to 5 months, it just might close above 98.67, then indicating longer term upward continuation. So 84.22 is the backstop right now. And if we close below it, we have a significant sell signal as we move through the rest of the year. I'm going to continue moving through the charts. I'm going to zoom in here just to acquaint you with also a descending channel bottom that goes back to the September high. So this is a 5-month channel structure at 83.38, dropping 62 cents a week. It is worth noting this for the next few weeks because I call this the slippage factor below 84.22. In other words, we could break 84.22, and we're not going to even see that as I'm speaking, but over the next week or two, we could certainly test it, should certainly test it, and we could violate it on an intra-week basis. Tag 83.38, and as long as we close the week at 84.22 or higher, we're in a stable dynamic, a bottom picking zone that allows this market to, ultimately round back up to 98.67 within 3 to 5 months. But if we do close below this 83.38 to 84.22 region, and now I'm zooming out again, it is this long-term channel bottom that is at 49.36 that I think, is a I don't know if I should use the word objective or attainable objective or possible objective or a clear-cut target. I don't think you can discount this possibility, and this would be a significant sell signal. And we can back out of this chart just a little bit to give you some historic precedents. We are in the 80s. This is as low as the TLT has been. But keep in mind the TLT began in September of 2002, and its low water mark was 80.51 in May of 2004. And so it does not have that 40, 50-year history that the U.S. Treasury bond does, the 30-year bond. And I'm going to show that as well. But first, I'm going to change this to a monthly chart So you can see going back to this May of 2004, you can see this channel bottom right here. And that's basically redrawn here, 84.22. If we close below 84.22, then we are anticipating 49.36. I do think it's realistic. What does this mean? It means a much higher accelerated interest rate environment. Now, I could be wrong. I actually hope I'm wrong. 80.51, I don't see a lot of significance there. In May of 2004, I'm going to take you to the monthly 30-year Treasury bond chart right now and take you to May of 2004. And this shows what's possible longer term. These are roughly the same structures drawn on the long bond, the 30-year Treasury bond. 109.13 is the base now for that. And if we close below it, which would be akin to the TLT closing below 84.22, the long bond throws off its own long-term sell signal, descending long-term 5-year channel bottom at 81.08, January of 25. This is a monthly chart. You can go all the way back, long bond back in September of 1981. We had a 22% prime rate. We now have a 7.5% prime rate. And so am I saying that we are destined for this channel bottom? No. But if I'm just looking at the charts, if I'm disregarding the fear factor and the concern about what that might mean economically, I'm just going to say that yes, if you close below a rising channel bottom at the base of a move, you have trend resumption. And this would be bear trend resumption. And I would point to 81.08 as a long-term objective in the 30-year bond if we were to close below 109.13 at the end of any week, at the end of any month. I'll take you back to this chart. This is your TLT. I'm going to back out of this and show the weekly chart again. And this is really the downward pivot point. Now, this may well hold. This can hold through the first quarter. And as I say before, we can round up from here. Wrong chart. Bear with me. We can round up back into, I'm backing out again, into the upper 90s. So that is quite possible. And it's also quite possible with the 30-year Treasury bond. Okay. So I also want to point out one more thing, and that is the inverse correlation between the US dollar and what's happening with the bond market. And that makes a lot of sense, right? I mean, as interest rates rise in the United States, and as they're still just a bit higher than the rest of the Western world, or the G7, if you will, we attract, obviously, foreign capital. And there's so many factors that go into currencies. I don't want to get into that. But this, I think, really one of the key variables, obviously, is the interest rate environment. And so as interest rates continue to climb, you've got a US dollar index. This is a monthly chart that broke out last month, December, closing above this significant channel top. This is a week ago. A week and a half ago, and it does indicate a retest of this high area here. I could probably type that out. That was September of 22, 114.77. And that was a few years ago, and 2 years ago, and 2.5 years ago, let's call it. And I think that this upper area is likely to be retested. You've got an extreme channel top. You've got a long-term, how long is this channel? This is a 26-year, 27-year channel top that we actually tested back in 22. It held nicely and we fell away. I don't know if you remember this video or not. I do. I've been doing US dollar index updates as well periodically. And Wicked Stocks has been doing this analysis periodically for some time. But with the dollar index, the question I actually have, is it actually an early sign for what we're seeing is possible in the TLT? This possibility of closing below 84.22. The US dollar, has the index itself, I should say, has actually already tipped its hand in that respect. The US dollar index is suggesting continued higher trade. This is a monthly chart. So what is this? It could be a 3 to 5 month move. It could also take well into 25. It could be a 5 to 8 month move. By mid-year, perhaps into the third quarter, this area expected, and it could be sooner, depending on facts on the ground and what's happening in the world. Crude oil, etc. I could go through a series of commodity charts. Obviously, the question weighing in everyone's mind: tariffs. Is the United States going to exact these these tariffs that have been mentioned, 20%, 50%, 100% against Mexico, our larger trading partners, Canada. And if the answer to that is yes, this chart actually supports that, in my opinion, as our larger trading partners devalue their currencies in order to make up some degree of the difference in the exacting tariff. So that's that. I think that pretty much covers it. I don't want to get into the economics, the fundamentals. This is pure technicals, and I'm going to take you back to this chart. Leave you with I'm going to leave you with this chart, the most appropriate one for the week. 83.38 to 84.22, base of long-term support. If we settle below it, this is a market that is likely to continue south over the longer haul. And yes, it can. It can violate that May 2004 low in the TLT. That's not a significant low. Once again, the U.S. Treasury bond, that's that low going back to May 2004. And you can see there's all kinds of price activity well below that, all the way down to 50.09 in September of 1981. So I'm not expecting a 22% prime rate, by the way, but I do think they can go much higher. I'm going to leave it at that. If we close below 109.13, let me add that. If we close below 109.13 in the long bond, and if we also close below 84.22 at the end of a week or month in the TLT. That is all I've got. Gosh, 11 minutes and counting. I'm going to leave it at that. I'll be back again in the future weeks, next month or two with an update. And if we get that settlement below 84.22, I will be back with an update. You have a great day.